Hi everyone, you are watching Commerce King Academy right now. Today in this video we have to learn about chapter number 6, name accounting for bills of exchange. Alright, we have learned in last video about this chapter introduction, definition as well as its important points and its specimen, structure or format of bills of exchange and its important or subordinated points, and the topic how a bill works between the parties, and discounting of bill of exchange and trading activity before the use of bill of exchange involve different parties, as well as its important points that how a bill of exchange process between parties. And further we have discussed in last video about the business activity under the influence of bill of exchange, including 9 important points, and bill of exchange trading activity encouraged after the use of bill and when all the parties are benefited. After discussion on the snapshot of last video topics, now in this video we have to learn about its. So the latest and current topic of this video, types of bill of exchange. The bill of exchange are classified on two different bases. Types of bill of exchange on the basis of period first, and when we'll talk about on the second type of bill of exchange on the basis of object. So let's start with type number 1 on the basis of period. On the basis of period, bills are of two types, right? First is demand bill of exchange. There are no fixed date for the payment of such bill. They become payable at any time when they are presented by the holder. So where there no fixed date, the demand bill comes into existence, right? So second type of bill of exchange on the basis of period, term bill of exchange, right? These bills are payable after specified period of time. The period after which these bills become due for payment is called tenure. As shown as name term bills, that means the bills which have specified period of time or duration within the payment of the bill of exchange, right? The period after which bill become due for payment is called tenure, duration and whatsoever. So the tenure or duration will be 2 months, 3 months and 4 months, and will depend on the consideration of the parties, right? The first major type was on the basis of period, and the second type of bill of exchange on the basis of object, right? On the basis of purpose of writing the bills can be classified as, first is, these are subordinated types of on the basis of object, right? So first, trade bill. On the basis of object, the trade bill come into existence in this way. These bills are drawn and accepted against the sale and purchase of goods on credit. They are drawn by the seller, creditor, and accepted by the buyer, debtor. So listen carefully, it's very simple concept. Trade bill is the bill which involve actual sale and purchase between the parties, right? Trade bill involves the actual transactions of sale and purchase between the party. The seller will be the creditor, right? And on the other hand, the accepted party or customer or buyer will be debtor. Same as the seller will be the drawer, writer or maker of the bill, and acceptor will be the payer, acceptor or dry of the bill of exchange. Clear? So on the basis of object, The bill of exchange have another subordinative type, which is accommodation bill, right? Such bill do not involve any sale and purchase of goods. Rather, they are drawn without any consideration. The purpose is to help one party or both parties financially. So, in this concept, the writer said about accommodation bill, we will explain in simple words. Accommodation bill is the bill which involve just simulation, right? So not involve actual sale and purchase between the parties. It involves just drawing of the bill and acceptance of the bill for the help of the parties, because when one party draw a bill to another party and another party accepted this bill, the drawer ultimately go toward bank or discount houses for discount the bill of exchange and ultimately receive the payment of this bill. So it will be helpful for financially aspects by the parties. So parties draws a bill in simulation on each other and attain the financial support from bank with the help of discounting. Understand? So I revise my discussion. We have learned about types of bill of exchange, alright? Types of bill of exchange involve two major types, on the basis of object and on the basis of period or object, right? On the basis of period, bill of exchange have two types which have subordinated types of period: demand bill of exchange and term bill of exchange, right? Demand bill of exchange involve honor of bill on the demand of the drawer, right? Term bill of exchange involve the duration or time period between the honor of the bill of exchange between the parties, right? On the basis of object, we have discussed the purpose of bill of exchange. First one was trade bill. These bills have actual trading between the parties. And the second type, accommodation bill. Accommodation bill just have simulation between the parties and no have actual sale purchase of stock, but simple drawing of bill between the parties for financial support of the parties, right? So let's discuss our next topic, which is classification of bill of exchange, alright? The bills can be divided in two classes given as under. First is inland bills. Inland bills shown as name. These bills are drawn in a country upon persons living in the same country, understand, or made payable in same country. Both drawer and acceptor reside in the same country. The second classification of bill of exchange, foreign bill. As shown as name, this is the opposition name of the above. This was inland bills and this is foreign bills. These bills are drawn in one country and accepted and payable in another country. A bill drawn in Pakistan and accepted and payable in London or USA or in another country. Alright? After that, we have to discuss our next topic, which is acceptance of bill of exchange. So let's discuss. Every bill has to be accepted by a drawer. One thing is clear here. Okay? After the drawer has prepared the draft, it is sent to the drawer for acceptance. Clear? Acceptance is an indication on part of the drawer that he is willing to accept the liability under the bill. Acceptance is given by putting his signature across the face of the bill together with place and date. After acceptance, a bill of exchange is also called accepted or having acceptance by drawer. In simple words, this paragraph says to us, every bill of exchange required the acceptance of the drawer. Where there is no acceptance of the drawer on the bill, so there is no liability accepted by drawer. So the bill should accepted by the drawer with place, date and signature, right? So we have concluded about this paragraph, acceptance is the backbone of bill of exchange. That's it. So our next topic, how transactions relating to bill of exchange are recorded. So let's see, in a business concern, numerous bills of exchange are drawn and accepted. Clear? Generally, under such conditions, special journals are used to record bill of exchange in the context of accounting. Understand? Called bills receivable journal and bills payable journal. These are the two terms for recording of the transaction of bill of exchange. Clear? From these two journals, the totals are posted to bills receivable account and as well as into the bills payable account respectively. So listen carefully about this. In this paragraph, the writer said to us, so for recording of the transaction in the context of accounting of the bill of exchange should the journals of bills receivable and as well as bills payable, because the transaction have two aspects. One side is debit and one side is credit, right? So the entries will be posted into these journals, bills receivable account and bills payable account. Understand? So we have to go forward. Every bill has two different aspects, which I said earlier. One aspect is the drawer and the second aspect is the acceptor. So let's discuss. Point A, to the drawer who has sold goods and want to be paid for them. Ultimately, one person sells goods to another person and ultimately will be paid to the value against these stocks, right? It is a bill receivable. He hopes to receive money on the due date. Sure? It is a sort of asset for the drawer and as good as money. Why? Because any person called drawer, seller or manufacturer makes sales to another person and ultimately the receipts will be bills receivable or amount receivable will be the asset for that person, right? Because he will receive the payment against the sending of stock in future dates, right? So this is the drawer aspect of bill of exchange. So when we will talk about the second aspect of bill of exchange, which is the related to the acceptor of bill of exchange who has bought goods on credit and has agreed to honor the bill on the due date. It is a bill payable, right? The acceptor must arrange in due course of funds available to honor the bill when it falls due on the due date or maturity date. Understand? So this paragraph concludes in this way by us, the acceptor who received the goods from drawer or seller on credit will honor the bill on due date or in next determinable date. The liability of acceptor will must arrange in due course fund on fixed date, right? That he will honor the bill on this date, right? So dear students, after reading about bill of exchange concepts and its working and about its terms and concepts, now we are able to know for accounting treatment for bill receivable and bills. So let's discuss. We can understand the accounting of bill of exchange with the help of an illustration. Let us suppose Mr. Salman is a manufacturer of shoes. Understand? Mr. Salman is a manufacturer of shoes and Mr. Imran is a retail trader of shoes. Clear? Mr. Imran, the buyer, wishes to buy shoes or goods from the manufacturer or seller. Understand? But he has no money. In this situation, to overcome this difficulty, why would be? He is agreed to accept a bill of exchange for 90 days. Right? If goods are sold to him on credit basis, so both the parties agreed. Mr. Salman supplies goods to Mr. Imran worth 10,000 for a 90 days credit and draws upon him a bill for the full value of goods for 90 days on 1st Jan 2005. The illustration given above can be summarized in the figure 4 given on next page. Before going toward next page, I revise this situation again in simple words. So listen carefully. Mr. Salman is the manufacturer of shoes. On the other hand, Mr. Imran is the second person who is the retail trader of shoes. Clear? So Mr. Imran wants to purchase stock from manufacturer but no have any money for purchasing of stock. In this situation, to overcome the difficulty, Mr. Imran, who is the retail trader, agree to accept a bill for 90 days or 3 months, right? And the other hand, the manufacturer or seller also agreed to give the stock on credit basis to the Imran. In this situation, the bill of exchange for 3 months or 90 days comes into existence between two parties. So let's discuss in tree shape or in structure shape this concept further for clear understanding of the students. You can see the snapshot of Salman becomes creditor and Imran became debtor of Salman. Clear? And acceptance received from Imran. So this is the structure or format of the drawing and acceptance of bill of exchange between the parties. So Mr. Salman is the manufacturer of shoes and on the other hand, the second party, Mr. Imran is the retail trader of shoes. Seller, manufacturer, Mr. Salman. Buyer, retailer, Mr. Imran. Understand? Both parties are agreed to supply goods. So goods supplied to Mr. Imran for 90 days credit for rupees 10,000. Clear? So what happened next? Creditor of Imran for 10,000 rupees. Salman is the creditor of Mr. Imran amounted 10,000 rupees. Clear? Creditor means any person or institution who lent money or lent the value in the context of money to another person, just like banks. Clear? When we will receive the loan from bank, the bank will creditor of us in this situation. Clear? Same as Mr. Salman lent the stock of Mr. Salman to the amount of 10,000, so ultimately will be called creditor of Imran. Mr. Salman will be the creditor of Mr. Imran amounted 10,000 rupees. On the other hand, the opposition situation is this: debtor Mr. Imran is the debtor of Mr. Salman, right? Amounted 10,000 rupees. Debtor means is the receivable of another party. So in this situation, Mr. Imran is the debtor of Mr. Salman. So Mr. Imran is the receivable party for Mr. Salman. So will be the debtor of Mr. Salman. Understand? So let's go ahead. Drew a bill of rupees 10,000 on Imran. Right? This is the dryer and this is the dry. Clear? In the context of bills of exchange, Mr. Salman have bill receivable entries. On the other hand, Mr. Imran will be bills payable entries. Right? Imran returned the bill after acceptance to the Salman. Clear? Listen carefully. Mr. Salman makes or writes the bill and give to the Imran. Mr. Imran have stamp, signature, date and place on bill of exchange and then return to Mr. Salman. Clear? After the acceptance of bill of exchange by Mr. Imran, bill of exchange will be on the hand of Mr. Salman. Mr. Salman keep the bill on his hand till the date of maturity. Clear? So after making acceptance by the dry, on the due date, the bill is presented to Imran and he honors the bill. This way, the cash paid by the dry and cash received by the dryer, cash received amounted 10,000 rupees from Imran. Cash received 10,000 from Mr. Imran. Clear? So dear students, with the theoretical aspects, we have understand about the process and terms of bill of exchange and also able to know about how bill of exchange works between the parties. So you can see in next video with the accounting or numeric treatment of this bill of exchange, and we will learn about how we enter the business transactions of bill of exchange into the journals. So keep watching Commerce King Academy. If you have any ambiguity about concepts and numerics and or illustrations or problems, So you may contact on comment section or WhatsApp number. So thanks for watching this video. If you like, then don't forget, share, subscribe and comment. Thank you all.